Hey folks, Dan Frio here with your opening bell for June 30th, 2025. So I hope you had a fantastic weekend because this is going to be a short week with a lot of information. So let's get over to it. So Friday we had basically the markets were flat when it comes to mortgage rates. We had Canada come in saying they're going to tax or put a digital tax on our tech companies, and that created some conflict on Friday. So we're going to see how that's going. And then also right through here, we also have Trump's spending bill. That's the big, beautiful tax bill. That date is supposed to be, that bill's hopefully supposed to be passed this week. We're going to see how those and a lot of other data that we're going to get today will be affecting these things over through here. So let's get to it. So my name is Dan Frio. I actually do this report twice a day to inform you guys what's going on with those things. And basically, I want you to understand the whys behind it. So the reason why I do this is I'm actually a federally licensed mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. We have a slogan, one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? I'll give you all my information at the end of this video. You're here for these things. So let's get to it. So here's what we're seeing right now. The markets were basically flat as a pancake last week, but here's the good news we got in over the weekend. Dow jumps 200 points. S&P looks to add to its record. The S&P just hit an all-time high with all this mess going on. But what's happening? Well, bet that the trade deals are coming in. So we're supposed to have a lot more tariff deals coming in by the 9th, as well as the big, beautiful tax bill that's supposed to be hopefully passed by the end of this week. So based on this information, what are we going to look at this week in regards to these things over here? Well, let's get over to it. The Federal Reserve is going to meet in 30 days, and here's the stuff that they look at. And we bring this up every day because this is important. This is truly what the Federal Reserve looks at. They look at inflation, the PCE. They look at the unemployment rate, which is, that's coming out this week. And they also look at the GDP. That came in last week as well. So we had the PCE and the GDP coming in last week. Well, PCE ticked up just a little bit from 2.2 to 2.3. We had GDP dropping from negative 0.2 to negative 0.5. That's not good for an economy. But now this week, we're going to get the unemployment rate. And some experts are saying this thing could spike. Other experts are saying, companies are just holding on to the people that they have now. They're not firing anybody, but they're looking just to hold their staff until all this mess actually gets resolved. So let's get over to see what we're expecting for this week and the whys behind it. So let's get over to the economic calendar we have this week. We went through like a precursor on Friday of what's coming out this week. Let's take a little bit of a deeper dive into these, and I'll explain to you how these will affect these as the news comes in. So let's get over to it. On Tuesday, nothing really coming in today. You can see that right through here. On Tuesday, we're going to get the manufacturing PMI, and what else is down here? The JOLT index, or the JOLTS index. Well, this is going to tell us the manufacturing sector. We like numbers over 50, and it's been 52, 52. So as long as it's over 50, that means our manufacturing industry is still growing. Then we're just looking at the JOLTS index. This is basically job openings and labor transfers. There's not going to be a lot of these, I don't think, because again, we know that a lot of manufacturers and a lot of companies in general are just holding off on hiring, and there's not a lot of people changing jobs right now. It's hard just getting a job. So if you got a job, stick with it. So I'm not thinking the job openings and labor transfer rates are going to go up. This was about 9 million back during COVID, so it's quite a bit less than where we are right now. So that's what we're seeing on Tuesday. On Wednesday, we got the ADP payroll number, and I'll post it for you, but I don't like their numbers. They're all over the map. Sometimes they're on point, sometimes they're not even close. But then what we're going to focus in on Thursday. Well, the markets are closed on Friday because of 4th of July. So what we're going to look at right now, my apologies on this, what we're going to look at right through here is Thursday, we're going to get average hourly earnings, jobless claims, non-farm payroll, and the unemployment rate. That'll fill in the rest of the void right through here on this number right through here. So if this number, what everybody's thinking, if this number takes a good jolt up, you're going to see the Federal Reserve come in maybe even in July and cut rates. As long as the unemployment rate stays stagnant right now and we don't have any solidification on the tariffs, you might just see these numbers just holding and holding and holding, because the Federal Reserve basically wants a little bit of crack in the unemployment market to give them basically green light to start cutting rates. So we're going to focus in on that. But the big news for this week, we're going to check and see how the trade deals continue to work out this week. And then also what we're looking at over through here is the big, beautiful tax bill, how that's going to go. But also in the radar, like I said, we're going to look at the unemployment numbers and manufacturing and things like that, just to look at is is how is our markets, and is there supposed to be a crack in the unemployment numbers? That's what we're going to stay heavy focused in on. So that's what we're seeing right across the board through here so far. If you get over to the bond market with the mortgage rates, here's what we're showing. So the MBS market is up 7 ticks right now. Let's go to a 1-day chart. What you need to understand with this chart, folks, if you're new to my channel, is we focus in on right through here. This is an MBS bond. What this bond is, it's a mortgage bond. That's why we don't follow the 10-year Treasury. But if you only have the 10-year Treasury to really focus on, well, just focus in on it. As long as this number is going down, well, most likely mortgage rates are coming down as well. But if you have access to my channel or just a short video from me each day, maybe 5 minutes in the morning, 5 minutes in the evening, I can explain to you exactly what's going on with mortgage rates and the whys. So to do that, what we do is we focus in on the MBS market right through here. So when this number goes up, that's what we want really to happen. When the MBS market, the rate or the yield goes up, that means mortgage rates are coming down. I'm sorry, this is the price of the bond. As the price goes up, you're seeing mortgage rates coming down. So that's what we want to see. If you look at a 2-day chart, really not much to talk about there. Look at it, it's opened here. We're up, down, we're stagnant right through there. But if you look at a 5-day chart, this chart's our friend. Again, as this goes up, and away, rates are coming down. So hold steady, folks, because this is our friend at the moment. So now, how can you take advantage of my charts and all this other things if you own a house, or maybe if you were looking to buy a home? Well, let's get over to it. My name is Dan Frio. I actually do this report twice a day to help you guys out and help to figure out what's going on with these things and the whys behind it. So if you're looking to buy your first house, I'd love to help you. If you're looking to refinance, I'd love to help you. And here's what we do. I can help you track these rates and do all kinds of things. But we do have a slogan here. One application, one credit pool will shop your loan to over 30 different lenders. Now, how does that work? Well, I work at a federal bank. That means I'm federally licensed. So I'm licensed in all 50 states as well as Puerto Rico. The unique thing is our bank is set up with 32 other lenders right now, 32 or 33. So what that means to you guys is I have the options when I'm looking at reviewing your loan. I have the options to use 33 other lenders. 33 other lenders. I can use their programs, their rates, their fees, and any incentives they have, like one through here. If you're looking to buy that first home, please check out this video to give you up to $7,000 if you're looking to buy that home. It's based on your income. So I'm going to give you some insights on that and where you can go to a chart or a mapping system, plug in your address, and it'll tell you, yep, you should be able to qualify for this program. And then if you do, there'll be an apply button right through there. But if you're a current homeowner, what should you do? Well, we also have this. If you look up here that says refi, I'm going to try to get this changed. But if you want to check and make me eligible, or how do I want to say this? Give me the burden of the proof to help you guys with the locking in that interest rate. So let's say, for example, you closed a year and a half ago, and you're at like almost 8%. And rates are coming down. You're like, Dan, when this gets to 6.5, I want to refinance. Well, go to my website. You're going to go right through here, refinance. You're going to click it. You'll put in all your information right through here, and I'll track your mortgage for you. So when that rate hits exactly, let's say in this case, 6.5%, we'll reach out to you immediately, get you locked in, and get everything started. But let's say, for example, you just need some help. Okay, so let's go down through here. Here's a whole bunch of tools to help you out in videos. I have over 3,000 videos on our YouTube channel, from Home Buying 101 all the way out to figure, is there any really new restrictions when it comes to FHA? And there's more and more and more. So that's it, folks. If you are locked in, I got some great news for you guys. I can actually review your loan estimate. It says loan estimate review right here. So if, let's say, for example, you locked in and your rate was, well, you locked in down here. And then as these rates go this way, that actually means rates are coming down. So if you want to see if I can get you a better rate, maybe lower fees, we'll just go over to the rate update right through here. And what you're going to do is click in right here. You're going to upload your loan estimate. You're going to let me know or see exactly what the competition's giving you. Let's see, with our over 32 lenders, can we get you a better rate, lower fees, maybe all the above? So that's our report for today, folks. So we'll be paying attention to the big, beautiful tax bill, as well as the trade deals that are going throughout the world. And that will be affecting these things today and this week. It will be a short week because we have 4th of July on Friday, so the markets are closed, I think, about 1 or 2 o'clock on Thursday, so it's going to be a condensed week. Hold on, come back every day so you can understand what's going on and the whys behind it. Thanks for watching, guys. If you haven't subscribed yet, please do me one favor. I'm trying to hit 40,000 subscribers as soon as I can. So if you can click that button right down there, that would help me out to get maybe noticed by more and more people, to help them out if they're looking to buy or refinance. Thanks for watching, folks. God bless. Have a fantastic day. If you need our help, please go to therateupdate.com. Love to help in any way that can. Thanks for watching. Bye-bye.